Hello, Warriors. New day, new month, new P&L. Let's make it count. In September, all the adults are back from the Hamptons. So let's see what's going on here. First of all, good morning. How are you, Sinatra? C2 Kerner. Well, that's an interesting narrative. I've never heard that one. Hi, Bran. Blake, Ryan's back. Kurt. It's sunny and raining at the same time where he lives. Patrick, what's TT? Okay. So a bit of risk off happening today. Have a dollar lower. Also, if you notice on the screen before I go to the charts, starting our annual fall sale. So there you go. If you've been waiting, here we go. September. Start off with Aussie. So last week I thought that we could pull back towards 66.5 for a buying opportunity. Up here it was a hypothesis, and now it looks like it could manifest. So trying to be patient for another 80 pips lower here. Cable is the one that's held up the best. Hasn't even challenged. Well, it challenged last week's lows. I would try it around, 30.70 or so, 30.30. Maybe we get to 38% back because you're already in euro past 38, looking for 50. So we'll see what happens down here around the 110 level. Risk off everywhere. They're even hitting the metals. Talked about perhaps $28 silver would be available if you wanted to get long. Could be there today, tomorrow. Canada getting a pop with the stronger dollar. The obvious place is 36, but could stretch. And the Dixie, figured about 102.50. If you watch Blake's week ahead video, really the gist of it was that that is a gift to be able to sell the Dixie at 102, which would be a retest of the breakdown of the uptrend that he showed. So, team, everyone ready for September?
Yes, rock and
Hey,
roll.
good morning.
Good morning, everyone. So, the Green Day wrote a song, Wake Me Up When September Ends. I really believe that you have to be alert. Forget that song, delete it from your collection. Wake Me Up When November 5th Ends. That's what I would write. That'd be my new song. So, Ryan, what are you thinking here? And let's start off with Euro.
Yeah, it's just having a little bit of a break. It was holding that 38.2 fib and the 110.40 area yesterday, not doing an awful lot. We are seeing there's a bit of a move in yen at the moment as well. So there's probably a bit of dollar creeping in as you Yanks come to the table. But if you go around the yen crosses, you can see there's a little bit of yen weakness creeping in. Euro yen,
Yeah.
pound yen, Aussie yen, that
Yeah.
sort of thing.
Yeah.
So yeah, it's a little bit mixed. I think we're doing that same old thing when you get a big data week. The market just positions around. It gets some risk off the table. It puts other positions on. It closes up, opens up, that sort of thing. I think we're just seeing that general move on the back of everyone's waiting for the data.
Okay. Are you impressed with how cable during the stellar correction is holding up? I mean, so far we've only corrected 23%, a little bit more than that.
Yeah, it's still holding up very well. We're seeing euro sterling back down testing the figure. That looked like it was bouncing a bit, but it's a dead cattish.
It's
And
about to take out 84, huh? Do you have downside targets in this if we take out 84?
It's got to take out 83.80. I'm getting
Okay.
itchy to put some sell stops in below there because that was the prior low. You have to go on something like a weekly chart to see exactly what's down there. Through there it should be low 83s, and then we've got a huge level 82.70s
Yeah.
if memory serves. So
Okay.
just yeah, just above that
Yeah.
that
Looks
prior
like
low.
82. If you just take the measurement of this range right here,
Yeah.
84 to 86 takes it to 82 once we get a convincing close down there. So
Yeah,
that
I'm still short from the 86s, and yeah, I'm itching to maybe stick a sell stop in through 83, 70, 75 to see if we catch a break, because that may mean another leg lower. But it's tough to have any conviction at the moment, with all this data and central bank messing around we got going on. You can position for one bit of data, and then the next bit of data blows you up. So yeah, I think it's going to be
anyway,
rolling the dice.
the difference between a professional and an amateur, and I include myself in the amateur camp because I am at times, and that's how I know, how I used to think and still have to fight thinking it, that most traders short from 86 would be booking it. Instead, Ryan's looking to build and can take the next signal to build up his position. That's how the guys in the Wizards make it by, um, not taking profits too soon and using the market when it gives you another signal. Like, say for example, you were short Canada going into 136, so 136 was support, but it was another sell signal. Blake pointed that out, that it wasn't going to rally once it took out 36. So just something to think about and look at your own trading and your own tendencies. That if you have a tendency to book it and then believe you'll be able to get back in on the next reaction, you're deluding yourself because you might be in the bathroom. Okay, so
Well, you're far from an amateur, Dale. We all know that.
well,
But yeah, we do. We all have amateur moments, don't we, where we make stupid mistakes and do silly things. But
well, we
they're few and far between, thankfully.
yeah, we come in with that paradigm, and if you're not disciplined, you just like a computer, you'll go back to your default position.
Yeah,
Okay,
yeah.
so
I mean, you take that euro sterling. You have to. There's times when, irrespective of whether you're in a position or not, you can't let that overbear on your thinking. I would be looking at a sell stop whether I was in a position here or not. Even if I was long down here at 84, I'll be looking at a sell stop reverse because the levels are level. So sometimes you can't let your positions. Uh, you know, I'm struggling to think. You can't let your positions overpower your thoughts.
yeah,
Trade the level as it is, whether you want to go long or whether you want to trade a break of it.
thank you, Ryan. Great to have you back in the saddle, riding with the
This week.
posse, riding with the posse. So let's bring in our trailblazer, K-Man.
Not today. He's off.
He is not here.
Oh,
Yeah.
oh, all right. Well, he's out blazing the trail for. That's why. Anyway, we'll be there soon, K-Man. We're gonna follow your lead. So, all right, Blake, how are you, buddy?
I'm doing well, Dale. How are
All
you?
right, pretty good. We're going to disintegrate here by Friday. I think it'll be 115 or something by
Oh my
Friday.
God, really? Oh wow.
110, 115. We're getting there
Oh,
as same temps.
yeah, I know.
So,
I keep
huh?
thinking we're past summer, but apparently not.
No, it always happens. I lived in Phoenix, and you kept September because you're used to wherever you used to live, the fall setting in. And I remember that most of the time it took till Halloween
Yeah,
when I was in the desert. So,
that's pretty much it. Yeah.
yeah, trick or treat. So, what are you thinking coming in this week, Blake? With
Well, well, well,
Go ahead.
first of all, the dollars, getting a little bit of a lift as we come into the week. We had some volatility yesterday. The dollar pulled back a little bit following the end of month, move, and then the dollar is re-strengthened as stocks are under a little bit of pressure. And I think one of the bigger standouts right now is copper. Copper's down. I mean, it's down over 2.5% right now. It's down pretty significantly. And one of the things about copper, I guess there was an article that came out in the New York Times, regarding China, and then you had this China data that came in. It was Saturday night, Sunday morning. Really ugly ISMs out of China. So, I think the global economy is thinking about, how weak it is, and you're seeing copper under pressure. Crude's under pressure as a result. Crude's near $72. So that's a bit of a standout this morning to me. And then it's obviously pressured the Aussie and the Kiwi a little bit, and those have dropped to fresh lows following Friday's dollar recovery. Now, the Aussie, as you pointed out, it is rolling over a little bit here, but it hasn't really pulled back too much. And
No.
that's the thing that's scary, because if you do see some dollar weakness, what happens with the Aussie? It's
Yeah.
when it's not pulling back due to this pullback in copper, the move down in risk. What happens? Yeah, like I said, if you get a bit of a dollar selling today, and I think you succinctly pointed out, the cable's looking pretty well. It's holding up pretty well, excuse me. And then the other thing, and I'm sure Ryan, you covered this during the flow show. I'm sure of it. And I listened to some of your flow show this morning. Was the Swiss CPI? Swiss CPI came in weak. Now, Swiss GDP came in strong, and that helped the Swiss along. But overall, the inflation data is weak there. So.
Like, I wanted to
Yeah.
ask you, I was reading I'm sorry, Ryan. I just wanted to ask, I read that positioning has finally flipped to being bearish the dollar.
Yes, I talked about it for the first 5 or 6 minutes of the week ahead video, and that's what I discussed. I pulled up the article from Bloomberg. The CTA positioning is flipped to bearish, and if you look at the last, I can pull up the chart for you if you
Go
want to
ahead.
see it.
So I think they're right, but when you get a flip, they're a little late to the party, and that we're getting a reaction.
Oh
So
yeah,
you know what I mean?
absolutely. And by the way, if I know Dale mentioned it, this is our 8-year anniversary. This is the kickoff to the trading year, as far as we're concerned. We offer the steepest discounts all year long for ForexAnalytix to be in the community, to be chatting with myself, Ryan K-Man, Stelios is in there, and obviously a bunch of other traders too. So if you want to chat with us all day long, come into the ForexAnalytix chat room. But this is what I wanted to show you. I wanted to bring this over as a result of what, Dale, you're speaking of. I'm gonna just go back. This is where, like I said, this is in Bloomberg. This is the dollar bears, as you said. They're usually a little late to the party, but the positioning is switched, and I want to show you two distinct times that are key. If you look right here, let me grab the drawing tool. You look at the end of 2022, right?
Yeah.
And then you look at 2020 to 21, right? So let's go back and take a look here. Let's take it off the euro. Let's put it in the dollar index. Dollar index. Actually, I'll go to one that I don't draw on as much. Not that one. It would be this one. So if you look at 2020, when this is the one where they turn pretty bearish right here, right?
COVID. Yeah.
Yep. That's this entire move, Dale.
Yeah.
Right.
Yeah.
That entire move. And in 2000, let me go back over here really quick. 2020, end of 2022, end of 2022 is this move.
Top.
Yeah, right here. So you can see when CFTC positioning shifted in a big way. Now we are just flipping right now. So that's the other thing. Could we get another one of these? I mean, could we get one of these where you can see that hedge funds kind of got flipped around a little bit? Possibly. But this is happening as the Fed is making a tectonic shift, what everybody feels is going to be a tectonic shift in the market. So I guess In other words, what really has to happen here is, and this is, again, I spent a lot of time on the week ahead video going through all these charts and the reasons why. You have to see the US data continue to weaken. And, I don't know. I mean, we have ISM, we have a lot of important data this week. But I don't know about you, Ryan, but have you seen the US labor force really roll over and die yet?
Nope.
Yeah. So
I made that point just quickly about the ISM today. The market got itself in a tizzy last month alongside the NFP. That employment index in the manufacturing ISM has been negative for the last 11 months, except on one occasion. So it's been in contraction for over a year. There's been 2 times in the last 16, 18 months where it's been in expansion. And so, it's the market had a little flap because it was a bit of a collapse. Yeah, click on that. I don't know if you can see the chart for the one above it.
Right here. What I'll do is I'll pull up the history so you can actually see it this way.
There you go. So the last time we were in expansion was a couple of months ago, and then it hasn't been there in expansion since October 2023, which was a September report. So it's been negative pretty much all the time.
You're talking about this one right here. This is the ISM services right there.
Yeah.
But services PMIs. I'm sorry, manufacturing. We're talking manufacturing. Services is actually in 2 days. The manufacturing PMIs globally have been in the gutter.
Yep.
I mean, you look at Germany, you look at obviously us, most of Europe. I mean, it's just
Asia. Yeah, a lot of it.
Yeah. So, like, again, as you pointed out here, last time we were in expansion was in April, and then before that was, I don't know. I mean, you go back November 2022. I mean, it's been a lot of really weak data. So how impactful is the ISM going to be? Now, I think it's the services data that comes in later this week. That's the data that everybody's going to be, paying very close attention to.
The NFP is a bell ringer, though, right?
Yeah, I think so. I guess the issue that I have with the jobs report now, I mean, it is obviously going to be a ringer, and it is definitely going to matter. And this week, and this is the other point that I made in the week ahead video, this week is going to be just more important than any other jobs data, because we are really pricing in whether it's going to be 25 or 50, right? And so if the jobs data continues to be strong, and I think that unemployment rate that we're looking for on Friday, you look at unemployment, expected to be 4.2%. If it comes in and it doesn't drop as expected and it stays at 4.3, or maybe even it goes up to 4.4, that is when people are going to start going, like, I don't care how many jobs have been created, our unemployment rate is really moving up quite aggressively. And then we might get that 50 basis point cut. Now, Ryan, you just talked with, and I haven't had a chance to watch the trade-off with Michael Brown, but I'm assuming you guys talked about the jobs report. So what was your opinion there? I mean, look at the unemployment rate, just, and I'm showing you guys just from, going from 3.5 to well over 4% now.
Yeah. The first thing with that, look at the trend. If you can, I don't know if you can show the chart on those numbers.
For some reason, it's not loading the JavaScript.
It's at historical low levels. Okay, so there's going to be some, call it a pullback. Okay, nothing goes down forever, the same as nothing goes up forever. But I think for this NFP, the headline number is going to be, to be blunt, an absolute shitfest. Okay, because we've had those revisions last month. We've had people thinking that there should be 250,000 odd jobs added to this number because of the storm, and so the headline number could be more bonkers than it is usually. If you want to trade this cleanly, trade the unemployment rate. Okay, stick with that one, whether it's horrendous or flat, unchanged or better. Use that after the market's jumped around on the headline number. That's going to be the important. So you can see there, look, 20. Take out. If you go back a bit further than the COVID spike, we're at all-time low levels. Is it really a problem if in unemployment gets to 5-6% in the grand scheme of things, it's not, you could call that about an average 5-6%. So it's got some room to creep higher, but it's all going to be how fast it does go higher. If we go from 4 to 5% in the course of 2 NFP prints, the Fed are going to sit up and take notice. But that unemployment rate is what you need to watch on Friday.
Isn't the Fed making the same mistake they made in the 70s, where we had 3 battles of fighting inflation, and this was the first one that he's claiming victory on, and it might be a policy error, and you might have to start tightening again, because if the economy isn't weakening, what if we get a real strong jobs report? I mean, really a strong one, because the data was not that bad last week, right?
Well, data just hasn't been that bad.
Yeah, I mean, look at what the bonds did last week. If anything's out of whack, it might be all the easing priced into the yield market.
But that's where Powell's clever, because they've jumped from the inflation mandate to the jobs mandate as a reason why they're going to start cutting rates. If jobs are strong, they'll just jump back to the inflation mandate. They say, well, inflation's coming down now, so we've still got room to cut. They want to get rates down. They don't want to keep them here. They want to get them down to a nice, middle ground, neutral rate, whatever you want to call it, and sit there for as long as possible before the next shit hit the fan moment.
Next cycle.
Yeah. Well, let's talk about some actionable items for today to give traders some ideas of what they might be in store. And I'm going to turn your guys' attention to sterling, just because I think, as Dale pointed out a little bit ago, it's holding up really well. Now I could say that we're in false breakout territory because we're down below 131.50, but we're 20 pips below here, and to me it looks more like a bull flag, and I would actually focus more on this channel that we were in and break out and sustain, break above it. The 38% retracements here at 131, and I'll tell you, pullbacks have been very minor, so a break back above 131.65 I think is a double bottom. Now, I know you guys were talking about euro sterling earlier, Ryan. That could obviously, if you come out of this flag pattern, even intraday, a double bottom is going to take us back to 132 and change. A move like that, if the euro is not reciprocating, then you're going to see the euro sterling sell off. So I want to keep an eye on sterling. I think it looks bullish above 131.65 to 70. And if we have a weak ISM, I think this is the one you need to focus on. Personally, what are your thoughts, Ryan, to be focused on today for traders? Dale, I'll come to you next.
Okay. Yeah, I think you've just got to roll with the data. Watch your levels. Watch your big ranges. Someone's just mentioned we just had a move down to support in gold. Those prior highs. The 2480s. Don't know what that's on the back of, but the range has held. So it's when you got these tight ranges, 124.80, your box. I've pretty much got the same box. When you've got a range like that, you watch and see if it gets tested over the data. If it gets tested and it holds, then you've got an opportunity to play the range. So for gold, you'd buy off the support edge of the range and sell it up into resistance. If you get a break, you've got to make sure that break holds and it's not just a quick fake out. So you want to watch any retest of the level. And I think that's the way I'm looking to trade it this week. I'm not going to pick a side. I know in the back of my mind, the Fed are cutting whatever happens to this data this week. So that's going to be my bias, if you like. And I'm going to trade the extremism. So if we get a bad ISM, the market goes all potty and prices 50 basis points, then I'm going to look to fade that sort of thing, because I don't think that's happening 50. And then just try and nick some pips in between the extremism.
Okay. Dale, what are you thinking today?
Well, I put your pound chart back up there with the bull flag.
Sure.
Buy it where on one more touch of Blake's bull flag, if it happens in the next couple of days.
Down here, 130, probably 75, something like that.
Yeah. In there, one more touch, play it, probably have a money stop under the prior double top, under 130 on a close. So that's where I would buy cable.
Okay,
And
very good.
I'm still looking to buy Aussie at 6.5.
Six and
And
a
that's
half.
probably near. All right. I mean, I'd start at your
66.50.
flag. Yeah.
Oh, okay. All right.
But I would start at the bottom of your flag, which is where 70, 80. Yeah, it's good.
Yeah,
Close enough.
66.80. So somewhere
Yeah.
down here. So,
Yeah. Yeah. I think these are all pullbacks to buy in currencies and rallies to sell in the dollar.
staying in the theme of sterling, I want to show you guys the pound yen. This one is trying to pop above, and I'm going to just put it right here. It's trying to pop back above the 200 DMA, and I think I want to talk a little bit about the yen and maybe get some comments from you, Ryan, here. Um, there were some comments, I guess, from Ueda last night. And I haven't had a chance to find out what they were, and maybe you talked about them on the Flow show. But one of the things about the yen is I think everybody's expecting the yen to continue to strengthen, and I do too. But I'm kind of in the camp that it's going to rally first.
Back
You
to
know,
52.
and yeah, well, it maybe like the pound yen
Less.
be maybe towards 96 or something, and the dollar yen might be back towards 150 or so before
Less.
it rolls over. Was there any comments from Ueda last night?
Yeah, apparently he submitted some paper to the government or somebody, and then it basically said that they're still on the path to potentially hiking again. Conditions are still okay, and that if the outlook progresses as they expect, then they'll be looking to cut again. It wasn't anything that we didn't already know, but you know what, the market had a quiet night. You guys were off on your barbecues, shooting cattle and roasting them and whatever. And the market saw a headline and thought we're going to move on it. So yeah, that's what got the initial move. But there's been a bit of yen strength, as I mentioned today in the crosses. It's gone a bit. Dollar's gone a bit strengthening in dollar yen, but in some of the other crosses, they're looking or were looking a little bit on the weak side first thing this morning.
Yeah, like the pound yen. I know I was looking at it last night when it was up here, and then obviously got up this morning. I was like, huh, that's interesting. But yeah, it's one of those trades that, like I said, I think the yen's going to strengthen overall. Like you close your eyes and open them up a year from now, and I think the dollar yen's going to be a little bit lower, like actually a lot lower. Like maybe to the sum of a couple hundred pips lower. But that doesn't mean that between now and then we don't get some move back up towards 150 before seeing 130. And I think that's kind of what I expected, and I have no yen exposure right now. It's just something that I'm
there's going to be some big long queues up at 150, 152, I can tell you.
Oh gosh, if we can get up here, yeah, there's going to be a lot of sellers up there. Everybody's going to be trying to undercut each other around those levels. Well, again, I want to reiterate, guys, it's going to be a very busy week. There is so much data this week. We have not only the non-farm payroll, we have ISM today, manufacturing. We got ISM services, we got ADP, we got JOLTS, we got some Australian data, we got Canadian GDP, we got Canadian jobs, Australian GDP. There's a lot of what's that?
BOC's Wednesday as well.
Bank of Canada is tomorrow. That is correct. Wow. That's going to be a big one. And by the way, I'll just give you guys a quick look at the dollar CAD. We are bouncing today, but right into maybe flag resistance, but more importantly, right into the key levels around the 135.90. This is going to be really critical up here. And the Bank of Canada is expected to cut rates today or this week, Ryan. So how do you feel about that really quick before we go?
Yeah, market's expecting a 25 pip cut, and but I think the conversation or the future is going to be about whether that's them now going on a pause or not.
Yeah. All right. Well, yeah, we're gonna see, and with the Canadian economy as weak as people think it is, we don't see it in the Canadian currency. I don't know. I don't know. We'll have to see following tomorrow. Hey guys, want to reiterate. We have our 8-year anniversary sale. These are the best prices you're ever going to get for ForexAnalytix that we've had. Let me just say that it's the best prices we've ever had. And that is for this month. Take advantage of it. Be inside of our community. A lot of people take advantage of it that are priced at higher rates. They'll take advantage of the 30% off for semi-annual and 40% off for annual prices that only comes around, a couple of times a year. Also, don't forget the trader funding program. If you're new to the trader funding program, you also get a one-on-one consultation with me, like an onboarding. And then if you take a reassessment, if you have a 100,000 or more assessment account and you have to take a reassessment, you'll have a one-on-one consultation with me as well. So make sure you take advantage of those offers that we have out there. And I was going to say K-Man. K-Man's
Just do it.
He'll be here tomorrow. He'll be here tomorrow.
Here's what a great salesman I am.
Just do it. Just do it.
Yeah, I'm a great salesman. Yeah,
you are. And Ryan, good to have you back. And yes, I did have pulled pork yesterday.
Listen, Blake, what platform does trader funding use?
Well, there's a few. There's like C Trader. There's
okay.
Yeah, there's actually
Paul, get a hold.
You can find them in the FAQs.
Yeah, or get a hold of someone. And
yeah. Exactly. That's a great recommendation, Dale. Especially if you have more options if you're not in the United States. But if you go to the Trader Funding Program site, and whoops, I didn't do it there. You go to the Trader Funding Program site and you just ask support. That's at the bottom of the page. They'll answer and tell you which ones are available to you.
Okay. All right. Well, thank you, Ryan. Great to have you back. Keep trailblazing out there, K-Man. He'll be back tomorrow, Blake said. And Blake, thank you. Good rundown prepping people for a shortened holiday week. Thank you, guys.
Thanks, mate.
Thanks.
All right.
Thanks, Dale.
All right, buddy. So Michael Kramer's with us right now. And Michael's work is top drawer. Welcome back, Michael.
Hi, how are you? I'm
trying to Mike. Good, Mike. So I went to your Twitter stream here. Look at you're on the ocean now, but I went to the Twitter stream and I saw that you had where was that? Your pinned tweet was
my investment ladder.
It was very good. So you could find Michael's writing on Seeking Alpha.
Yes.
And Mike, since we last talked, he showed up for a week, but someone knocked his glasses off, and I'm wondering when you think he's going to come back.
Wait, say that part again. Who knocked off whose glasses?
Oh, the bear. You're sharing your.
Oh, yeah.
You see the bear?
Yeah.
Or I'm not John.
Yeah. Oh, yeah. That showed me. That was supposed to be an image of me, like thinking really hard with smoke coming out of my head.
Okay.
As I was, trying to put together that quarterly letter, which it's funny because writing these quarterly letters seem to, they seem to get harder and harder to do sometimes because you're trying to explain to people, what you're trying to think about in terms of what you're doing and how you're managing, the risk around the markets and everything. And it's a tough thing to do sometimes.
What did you think when you saw a 60 reading on VIX that day?
I woke up, I was actually in Aruba on my summer vacation. Well, one of my trips that my kids had me going on all summer. And I woke up and my immediate reaction when I saw that was like, oh shit. And it wasn't like an oh shit, like, the world's going to melt down. I'm like, oh shit, they're going to come in and just sell the shit out of this thing now. And the market's just going to rip by the end of the day.
Yeah. Well,
like, why do they have to do it like this?
Well, I think it was a little dysfunctional. I don't think people were getting trades off when the VIX.
No, I mean, first of all, this is happening pre-market. So who the hell is looking at the VIX and really seriously, trying to find liquidity at 8:30 in the morning or 8 in the morning, right?
Well, it
And
should have forced a lot of the short volatility players into being forced to cover. And there are many ETFs that implement selling vol strategies.
of
And
course,
they
then it happened at the worst possible time.
I don't think they took a hit because they didn't make a market. There were no markets made in VIX when that
Well,
was
because
going on.
again, like it's the VIX is, I mean, the VIX is an index, right? And it's derived off the S&P 500, options and futures. And there's no volume at that time of the day in those types of instruments, right? So if you're, in VIX futures or your VIX options and you're trying to trade out of them or trying to, I mean, what is your benchmark doing and how are you really getting accurate pricing? And so it just seemed like a perfect storm because, not only going into that job report, you had all those big corporate earnings that came out the days before.
Right.
And you also had the volatility dispersion trade unwinding at the same exact time, which is basically go long vol on the underlying equities within the S&P 500, the top names, and go long the stock, and then hedge that with being short S&P 500 implied volatility. And so once you had Apple and all those companies report results, that implied volatility dispersion trade just unwound. And
it was
so
historical. I've never seen this before. Have you?
no,
once
not
in
not
a
in this
lifetime.
manner, not in this manner. So I think it was just a perfect storm of, this people getting trapped in the wrong side of the trade, and I think it just, again, you had Japan down 12% that night, you had Kospi down 8 or 9% that night, and the kind of thing that I thought was weird when I look back on that day was that Europe wasn't really down very significantly. And that kind of was another warning to me that, hey, this isn't like the end of the world going on here. This is just something weird happening. And this is actually going to probably be somewhat bullish over the very short term because you knew that the VIX shouldn't really probably be at a 60 hand.
No, the magnitude of the S&P correction of 10% did not justify a 60 VIX. That was positioning, wrong-footedness.
Yes.
Because those guys have been making money for years now, selling every VIX rally to 20. Okay, so
right.
They've been picking up quarters off the sidewalk for years, and the steamroller came, but they didn't get run over because there was no market made.
Right. And so
I mean, they were so wrong, and they didn't take a loss, and the people that were so right didn't make money on that.
No, because again, like I think it was just
I was one of them, Mike. That's why I keep talking about it.
Anyway. Yeah, I mean, like, but honestly, look at the time of the day it was. Most of that move was pre-market, right?
Yeah, but you should have
and so to me,
been able to get out at 30. You couldn't even get out at 30.
Well, how are you going to get out? There's no market, right? There's no top of book, I mean. Right? There's no depth.
No, I mean once the market opened. So I mean, they still weren't making markets.
No, because because of the dislocation.
Unbelievable to me. It's just another war story. So, all right. So, do all-time highs look like a layup to you here, Mike?
It depends on what index you're talking about.
All right, S&Ps.
I mean, the Dow obviously is already there.
It did it. Yeah, it's diverging up here at new highs.
The S&P, I think the S&P is a bit of a push because it's really close and it can do it. It just needs like a crazy, $6 billion buy imbalance like it did on Friday.
Okay.
Because it's so close. The NASDAQ, I think, is a different story. I think the NASDAQ is going to be much more challenging because you've lost the leadership of NVIDIA. I think that story is pretty much, you're talking about a story there that I don't know how they do it. I showed my accountant the numbers they were putting up and how they were sort of driving those, $2 billion beats, $4 billion guides every quarter. And his jaw just like kind of hit the table and looked at me and goes, "What's going on here?" And I'm like, I don't know.
Yeah. And
then you have that whole SMCI thing.
There's a lot of books cooking going on out there, isn't there?
Well, SMCI, and then of course Hindenburg had that report out there, and They named NVIDIA something like 17 times in it. So I don't really know what's going on in this space. I think I was thinking about this over the weekend because if you remember back in the day, maybe in the mid 2015, 16, 17s, you had all these companies, Skyworks, Corvo, NXP, the Apple suppliers, right? And these things always traded at a discount because of the concentration risk that was there because of Apple. And so now you have NVIDIA, and NVIDIA gets something like 50% of its revenue from what, 4 or 5 companies. So is the market going to finally wake up to the fact that, you only got really a couple of guys buying these things and who really can afford it? And is there a concentration risk that now needs to be priced into this valuation? And I would argue at 20 to 25 times sales, right? You don't really have that at this point. On top of the fact that you have a growth rate now that is going to start coming down rather materially.
Yeah, so we're putting in the second lower high in
the
video
third.
here. Well, here's the first.
You missed the one before it.
This is the high, the all-time high, right? So the second lower high right here.
Oh,
and
okay,
and it looks like, if we take out, and it looks like that could happen today, the low from, what was this, Friday?
Yeah, it's like 118 is the big level.
Yeah.
Then you go down to like 109 at that gap.
Yeah. And so is the market going to be able to rationalize that? I'm already seeing it. NVIDIA is its own gambling casino. It's not reflective of the market. That what led the market up isn't going to affect the market. They'll still be able to generate something from maybe smaller caps
I
to
don't see
generate a new
how.
high. You don't
I
see
don't see
how?
NVIDIA accounts
Okay.
for 30% of the gains in the S&P 500.
Okay. All right. Well, then this is
So
the whole market right here at this
basically,
level,
I mean,
right?
if you take NVIDIA out of the equation, the S&P 500 is 6 or 7% lower.
Yeah. So there you go.
So
there's the market.
That is really the market, right? And
yeah.
On top of that, what are the other names behind it? Apple, NVIDIA, Microsoft, Amazon. I mean, I own a bunch of these names long term. Apple, Amazon, Microsoft, Alphabet. But
You own Meta?
no, I never liked Meta.
All right. Well, look at this on the weekly, and there was actually a 2-week sell reversal last week, but this is right out of a textbook. And I'm not saying that we can't make another high, but I just want to show you this weekly. So we did make a marginal new high here, Michael.
Right.
Last week, and then last week we closed under the prior 2-week close. But look at this.
Yeah.
That's not a good sign, and this could be a 3 driver up here, right? So this has
I'm
been
trying
one
to
of the leaders, right? Facebook.
Yeah, that's what I was going to say. I mean, if you take NVIDIA out of the equation and then you're left with, the other guys, and those guys are all benefiting because of NVIDIA. They're just being pulled up, right?
Yeah.
So, I mean, you take NVIDIA out, you take Meta out, there is no gains this year, really. Small caps, I mean, small caps to me are a casino too. I mean, what drove that first, move higher in small caps back in July was a good old-fashioned gamma squeeze, right? You had rising implied volatility on the calls. Call volume was surging. As soon as the call volume disappeared, sellers came in, and that was the end of it, right? And the other thing, too, is the IWM. If you can overlay a chart of the IWM with the KOSPI, you'll see it's the same exact chart. And KOSPI is not going up. It's kind of been heading lower again.
Okay.
If you hit the plus sign next to the IWM.
Okay.
Go to the right. Go to the left, rather.
Where?
Click X. Now go all the way up to the upper left-hand corner. No, hit X. You want me to do it?
Yeah, go ahead. I'll stop sharing.
I'll take over. Oh, I can't. When can I?
So what are you thinking and doing in here? I've heard
You see my
guys like
screen?
it's coming up. There it is. That's a Canadian.
If you take the Kospi, right,
Yeah,
and then you do a daily,
yeah.
and then you just put in the IWM.
Why would they be so correlated?
I don't know.
Okay.
You see it?
Yeah, yeah. Pretty tight.
It goes back. I mean, this goes back a long way, and so what you see here is that, you know, what does the Kospi been do? The Kospi sort of leads the IWM. So here was your big rally. IWM didn't participate. IWM
Right,
like catches up all at once.
right.
Kospi crashes. IWM crashes. Kospi comes back. You could see they've been separating again. So I
Yeah.
would say that, you know, I use the Kospi as a leading indicator for small caps. And
That is really a lesson. That's a pearl, when you find these
well, yeah,
correlations that,
it's
that's
sort of the
interesting.
same thing. You can do the same thing with the Nikkei, and I feel like the Dow or the Dow transports. I forget which one it is sometimes.
Okay. What are you advising people to do in this environment? And does anything what's the market telling you to
See,
be cautious?
this is the Nikkei and the Dow transports.
Pretty tight.
Pretty tight. Yeah, you can do the same thing, I think, with the Dow, if I remember correctly. It's not as
Yeah.
tight, but it's pretty close.
Yeah, Dow's reversed. So the ones that you were showing, like the Kospi and the Nikkei,
Yeah,
they took the big hits and they're retracing
but not nearly as much as what you've
much as a
seen in.
Russell
Yeah.
in the
And then
Russell.
of course you can take the S&P, right? This is one of my favorite charts to show people. So this is the S&P versus the Nikkei, right? But this is dollar yen. Now if you take the S&P and you convert it into yen, it's practically the same chart.
Look at that. Yeah.
So, you know, when you look at what's happening in some of these other markets, you're kind of like, can the S&P maybe make a new all-time? I mean, I'm not going to, you know, you're 0.5% away or whatever it is. Does it really matter?
Yeah.
But, you know, when I look at where the market is right now, I was doing a video for my subs over the weekend. I'm a member of the Foundation of the Cycles Foundation. I don't know if you're
Oh,
familiar with them.
I know those guys. Yeah.
Yeah, so I'm a member there, and they give you access to all this great cycle work. And I just was spending my weekend building her cycles on on my
Yeah.
on my trading view. But I'll show you something that I showed my subscribers last week. This is the Foundation for the Study of Cycles. This is
Who's
their
running that now? I know I've talked to those a few of those guys.
Smith.
Okay.
Well, you have Lars, who's the big guy over there. Lars von Thien.
Okay.
And then you have Richard Smith, who's the chairman. But they do like these videos on YouTube every week. Lars does one, and he does really good work. And then you also have every 6 months they have they do like a summit, and they'll have like Jake Bernstein, and they'll have Peter Eliades, and they'll have Larry Williams, and they have all these great guys for free. Just go on and do their cycle work. And, you know, so when I look at this, let me just get up to the modern times, right? And we look at these cycles where we are right now in this market, right? And so this thing actually kind of has an AI feature, right? And it will, this is on the daily chart. And if we switch it over to the weekly, and it automatically tells you what the strongest cycles are, what the dominant cycles are in this. And it's telling you right now that the 181-week cycle is the most dominant cycle. Typically, you'll find that the long-term cycles are always about 180 weeks, or even 180 days for that matter. And you can see that right here. It gives you this notification. And what it shows you right now is that this cycle is basically at a peaking point, right? Between now and, call it, sometime this fall, we could be in a point where the peak in the S&P 500 is sort of in for this cycle, right? And so it doesn't have to mean that you go straight down. It could be a case where, like in 21, it could be a case like
consolidate.
you could be a case where, like in 2018, you just really consolidated for a really long time.
Yeah.
But you can see it's nailed some of these cycles pretty well in terms of peaks and troughs. And if you run that over with the longer cycle, the 400-week cycle, you can see this is coming into some sort of bottom here, but the bottom doesn't come really until almost late next year because this is a long 300. So when I look at this, I'm kind of like, we're at a point where, we could see seeing this is a 149-week cycle also already rolling over. When you look at the next more cycle, 125 already rolled over. Here's another one here. They're all kind of rolling over. And what's interesting is if you then take this and you do the Japanese yen equals
So the yen bottom is coincident with the market top.
Yeah, I'll show
It
you.
used to be a flight to quality currency. Maybe
And it still is, I
yeah,
think.
yeah. So maybe that's that's going to be behind the yen's descent. U.S. dollar yen's descent is going to be risk off.
So here's the
Oh
yen.
yeah. Okay. So all these cycles are peaking,
And you can see
or have
this.
peaked.
This is showing you that we're in a down cycle, right? And
Yeah.
so this is kind of suggesting the yen continues to strengthen longer term.
Yeah.
And then if you look at the second strongest cycle, that's also telling you you're a major point of change here, right? So you have these two different cycles sort of telling you two different things. And then I was working on this over the weekend, if it works, if it pulls up. 10-2, because we've been seeing the 10-2 curve steepen. And typically what you see at this point of the cycle is, notice this, right? So this blue line is the yen, the white line is the 10-2. So notice when the 10-2 usually steepens, yen usually strengthens, right?
Yeah.
It's happened 3 times in a row. Now we're at the point where, again, you're seeing the same sort of thing happening. Where the yen strengthening, yield curve is steepening, and that's your flight to safety, flight to quality type of effect, I think.
Do you think that a weaker dollar, and I'm a dollar bear, we held par on the Dixie, but I think we're going to take it out after this bounce. It used to be when we had risk off, people would go to the dollar. Are things changing that if we have risk off, we could also still have a weak dollar?
I always think about it in terms of relative, right? Because it's possible that, let's say, it's possible, given the size of the carry trade, for example, that the dollar weakens versus the yen, for example, if the U.S. goes into recession, because those interest rate spreads will really contract. Here's another thing that I like to do. So if you take the US 10 minus the Japanese 10, and then you overlay that with the Japanese yen, you'll see it's basically the same thing. So again, like, you're at a really important inflection point here where if the spread between the US and Japanese 10 crosses 290 or so, the next big level of support from a technical standpoint probably comes around 236, which means the yen's going to strengthen materially. And you can do that across multiple different currencies. This is the German euro. This is the German US 10 versus the German 10, and you can do that with the euro. It's inverse. But if you flip it,
do you think the Fed is making a policy error, or they're too late, or they're too early?
it's interesting because if you look out at inflation swaps in terms of how they're pricing things right now, they're telling you that inflation has all but vanished. And I don't really know for certain. This is the inflation swap curve. They see it being all the way below 2% by June of next year.
Okay.
So, I mean, we're not, CPI is expected to be, in this low 2% range by March.
Okay.
I mean, so that
So,
certainly,
okay. So
I
people
mean,
construe that as bullish, but maybe inflation is coming down because demand is starting to fall off.
because nominal growth is slowing. I mean, this is your 1-year inflation swap. That's also come down. And
Yeah.
here's your 5-year break even. Um, that's also come down quite a bit. So, like, what the market seems to be suggesting is that, no, inflation may not be an issue. And so when I look at these numbers, you can see we broke this key level of support in here around 210.
Yeah.
And so typically the way I'm thinking about it, right, is you have sort of this falling inflation expectations, falling inflation swap valuations. You have a steepening yield curve. You have a strengthening yen, weakening dollar. That to me really kind of points to this idea that the market is preparing for a slowdown in nominal growth.
Okay.
And
I've
you have
heard.
a rising unemployment rate.
Okay. A lot of the sectors that led before the sell-off were consumer staples,
Yeah,
mainly defensive issues. People were buying gold and
right.
bonds and mainly risk off. And then throw on top of that the SPLV, which is people trying to avoid
Oh, low
risk.
volatility. Yeah.
Yeah. And that people think this is a good sign because we're broadening out. But
Mm.
it's really the market being afraid of there's some fear coming in. They're worried about higher volatility. It's bearish. Do you think
I
that
mean,
so?
I personally think there's going to be more volatility just because you're number one going into an election. And number two, we went through a period of very low volatility. And
Yeah.
typically after you go through periods of low volatility then begins to expand again. I mean, it's just the nature of how volatility tends to work. And so I'm not, I haven't been bullish, that, Dale, for a
Yeah,
long
I
time.
know. Yeah.
But and that's obviously been the wrong
Yeah.
view, right? But again, I can look at the market and say, a lot of the reason why that hasn't worked has been because of this AI, led rally. But my view has also been one that you have to be very defensive in this market, meaning you have to you can own high quality names like kind of like what I do, but I think you also need to have cash on the sidelines to kind of hedge yourself a little bit because we are susceptible to things like we just saw in the month of August. And I'd be curious to see what happens if the S&P doesn't go on to make a new high, if this is kind of it, right? Which I could make an argument that this was it, right? And we're going to see a turn lower from here. Then because I mean, if you just look at this chart, I mean, we filled the gap and that's it, right? And so technically, from my viewpoint, we really don't need to go any higher. Technically, there's this rising wedge pattern that formed really nicely off of this lower
Yeah.
levels.
And it's back inside the wedge. So
And it's back in,
maybe you just wait for it to close back outside the wedge for a signal,
right,
for a go,
right.
right?
And when you look at, the NASDAQ, it's not really participating. Here we are. Here's a trend line. You broke it, came back
Yeah.
up, you came back around it, and now you're testing it again. If you don't make a new all-time high here, and suddenly you have a lower high on the S&P, what do people start wondering and thinking about in terms of that? And also just seasonally going into September, you have to remember a lot of liquidity gets drawn out of the market, because in September you have basically treasury settlement, treasury tax dates, and that sucks a lot of liquidity out of the market. That basically
Okay.
causes
Interesting.
reserves to decline. And this is one chart I have. It shows you basically I take everyday SOFR volumes, and which is the money that's in the overnight funding market, and then I add in
Yeah.
reserve balances, and then you can see the price. The blue line is Bitcoin. And Bitcoin tracks this very well. The S&P tracks it fairly well also. But again, we're going into a time of September where there's going to be a lot of liquidity sucked out of this market over between now and especially around the 17th or 18th of the month.
Okay. I tell
So
you what,
I would
Michael,
say that
really,
there's a very good chance in my eye that you don't make a new high
okay.
this month.
Gutsy call when most people think it's a given. That's probably why it probably works. Michael, best place for people to follow your work. First of all, follow Michael on X at Michael Mott CM. You got to follow this guy. He's a thinker.
Thank you.
I love the way he goes beneath the surface of the markets to give you correlations that I've never thought of. IWM and Korea, the Kospi. You can learn a lot from Michael if you read his stuff,
Thank
and
you.
that's how you become better. That's how you become better. So,
That's
Michael,
right. You always
how
got to
many
learn.
years have you? How many years have you and I been talking here? Couple?
I think it's about our second year we're going on.
All
I
right.
think you
All
started
right.
following
Well,
me
I
in
want.
like 22. You found me.
Okay, I'm glad that our paths cross, and I'm
Yeah.
also I want to thank you for bringing in your excellent work and sharing it with our community and edifying them.
Anytime. So I have the Twitter account. I write for
Yeah.
Seeking Alpha under Mott Capital.
Okay,
I have a
Mott Capital.
Substack called the Market Chronicles, and now I have a YouTube channel which has been really growing quite a bit. I try to put up a video a couple times a week there, under the Market Chronicles as well.
Okay, and you could tell that Mike's really a guy that loves the beach because even when he's not there, he has it as a backdrop. Okay, so
Yeah, I'm sad the summer is over.
surfs up, Michael Kramer.
Yes, yes.
I'll see you out there. We could pearl on the and hit the ocean floor.
That sounds
Uh,
great.
really I really appreciate you being here today, Mike. After the holiday, thank you very much,
No problem.
Michael
Anytime.
Mott, Michael Kramer. Everyone, follow him on X at Michael Mott CM, and you could join the team in about 13 minutes on the morning edge. Remember, don't just count your correlations, count your blessings, and see everyone tomorrow in this holiday week. Adios, Michael. Thank you, my trading warrior brother.
Okay, thank you.